assets in Chinese stocks. Now you're down to less than 1%. So there's a clear change. And it's not just in ARK Innovation either. You've seen that in the ARK Next Generation Internet down to 5.4%. That's lower than any month end based on our data since October 2014. So, you know, I mean, it's not all the funds. ARK FinTech Innovation still has around 18% of its assets in Chinese companies. Nonetheless, I mean, there is a clear trend. ARK Innovation had 4 companies that they were invested in. 2 of them they've completely sold out of, the search service Baidu and also the streaming music service Tencent Music Entertainment, which leaves 2 at this point, K Holdings, an online real estate broker, and Huya, video game streaming company, and they've cut their stakes in those 2 businesses by about 3/4 from where they were just a few months ago. And you mentioned the idea of a valuation reset.
I would say from a valuation point of view, these stocks have come down. And again, from a valuation point of view, probably will remain down.
It's been a terrible year for investors who own Chinese stocks, especially in the tech and educational sector, as a crackdown on education has spread to Chinese tech stocks. The Chinese government wiped out nearly all the value in the for-profit education sector, when it said that tutoring companies like New Oriental Education Group and Tal Education Group would be barred from making profits, and that they would have to register as non-profit enterprises. China's increased scrutiny on certain businesses began late last year following the abrupt cancellation of Ant Group's IPO. That scrutiny then spread to Alibaba and Tencent earlier this year, with both getting hit with anti-monopoly measures and fines. For example, Alibaba was punished with a $2.8 billion fine over anti-monopoly concerns. Recently, Beijing also blocked the ride-sharing giant Didi Global from listing its app on major app stores shortly after its IPO. All this uncertain regulatory environment for Chinese stock has led to an investor exodus from popular names, with many large investors exiting or significantly trimming their positions on the most popular Chinese stocks. Among them is Cathie, the head of ARK Invest, which runs a number of popular ETFs. In late July, ARK Invest sold the last remaining shares of its stakes in Tencent and Baidu, and also sold shares of Key Holdings, JD.com, and PDD. In a webinar with investors, Cathie said a valuation reset among Chinese stock is occurring, and that their valuations could remain depressed for some time. On the flip side, Wedbush analyst Dan Ives thinks losses for Chinese tech stocks could lead to gains in US mega-cap tech stocks, as investors rotate out of once popular names like Alibaba and Tencent in favor of Amazon, Apple, Microsoft, and Google. Despite all this, I am not selling my BABA shares, but I also will not add to my position. I bought Alibaba a year ago with the goal of holding long term, and as fundamentals remain strong, I'll keep holding. Despite Chinese tech stocks are cheap, I think they will remain risky for the foreseeable future, so I won't be buying any at this moment. Remember, this is not financial advice, and you should always do your own research before investing in any stock. Wish you the best, and thanks for watching.